Great news for home buyers that are using the USDA Rural Housing mortgage. It was recently announced that the income limits for the program have increased. We're going to talk a little bit about that in this video. If you have questions, please reach out to us by visiting USDAmortgagesource.com or call us 7 days a week at 800-743-7556. Okay, we're going to briefly just touch on exactly what is a USDA mortgage, and then we'll talk about the income and eligibility restrictions. This program is a government-backed mortgage that offers 100% financing to eligible home buyers. Again, it's backed by the U.S. Department of Agriculture and Rural Housing, and the 502 Guaranteed program is administered by approved lenders and banks. This program is designed to expand eligible rural and a lot of suburban areas. And one of the key components for eligibility, really there's two key components: where the property is physically located, and then also the income for the household. And it is a income-based eligibility with household income limits. These income limits depend on the size of the household and then also where the property is located. And that's what we're going to touch on today. Okay, so again, the income caps recently increased, and in order to be eligible for the program, again, the household income must be under the set USDA eligibility limit, okay, and it depends on the household size and location. So for most of the country, a family of 1 to 4 members, the current income limit is going to be $119,850. For larger households that have 5 or more members, that income limit goes higher, up to $158,250. There are some high cost locations in the country, maybe in areas of some areas in California, Florida, and the Northeast that are deemed high cost locations. In those counties, in some cases for larger households, the income limits can go as high as 200,000. So it's important, when you use the income calculator, put in there where the property is actually located. It's not where you are now, but where the property is located as far as the county goes. Okay, and again, it's important to know that these income limits, they are periodically updated. Okay, so please check the website for the latest updates. The current limits, though, now they will be in place for the remainder of 2025 and likely most of 2026. Okay. Now, one thing important to note is that when it comes to income eligibility, it depends on the total household income, just not the borrower or borrowers on the loan application. There's basically income that's used for eligibility purposes, and then there's income that's used for loan qualifying purposes. Okay, so an example would be, let's say there's a husband and wife that wants to purchase a home. Maybe the wife, she's the one that's going to be on the loan application. She has a full-time job, so her income's only going to be used as far as qualifying for the loan. But maybe the husband has part-time or sporadic self-employed income. He's not going to be on the actual loan application. Okay, it's important to know, though, that his income still must be included when it comes to eligibility purposes. Okay, there's eligibility income and then there's qualifying income. They're two different things. Okay, so what counts as income? Again, all adult household members, their income is counted. Okay, of course, wages and salaries, and we're talking when we talk about the income also as far as, let's say, a W-2, someone that has a standard W-2 job, it's going to be based on the gross income. Bonus overtime, child support, alimony, Social Security, disability benefits, self-employed employment income. These are the things that will be included. And again, this does include household members that generate income even if they're not on the loan application for loan qualifying. Okay, it's also important to remember that there are eligible income deductions. Maybe you're close to the limit or slightly over the eligibility limit for income. There are eligible deductions that you can take for things like documented child care expenses would be an example. So there are a list of things that can be deducted from that total number. And again, if you have questions as far as formulating your income for eligibility purposes, please reach out to us. We'd be more than happy to take a look at it for you. Okay, so why do these income limits matter? Well, really the program it's there to help target lower to moderate income buyers and ensures affordability for rural families. Um, if you're exceeding the income limit, you're not going to be eligible for the USDA Rural Housing Loan. There are other options that are in place that do offer low to no down payment that may be available to you, and we'll take a quick look at those now. Some other options would include a regular FHA loan. The FHA loan, again, is another government-backed program through the Federal Housing Administration. This program does require a 3.5% down payment, but there is no income limits or property location restrictions. Keep in mind with USDA, the second key component with eligibility is where the property is physically located, as it must be located in a USDA eligible area. Um, and you can look up a property address through the USDA, the online USDA eligibility map. If you refer back to some of our other videos, there's detailed instructions on how to do that as well. Okay, but FHA is a good option, and there are plenty of down payment assistance options that are available with an FHA loan as well, depending on where you're located. Now, some of the down payment assistance options may have their own income restrictions in place as well, though. VA loans, if you're active, past or active military, of course, and you have VA eligibility, that's a wonderful option. That also is 100% financing, and there is no income or property location restrictions with VA loans, and they have no mortgage insurance, no monthly mortgage insurance, which is great. Conventional loan options generally start at 5% down payment. Again, no income or property restrictions. And this allows for higher loan amounts. So maybe for home buyers that are in more expensive locations, that could be useful. And in some cases, down payment assistance can be available with conventional loan options as well. That's a basic recap. Again, if you're a home buyer that has questions, please visit us at usdamortgagesource.com or call us at 800-743-7556. Thank you.